The housing market has just been one chaotic, bumpy ride the past few years. Will 2025 get any better, or will this chaotic ride continue? Experts at Zillow and Fannie Mae tend to think it could be more of the same for next year. So what exactly is in store for 2025? I'm going to talk about that today, so let's dive into it right now. I cannot believe it's December already. When did this happen? This year flew by. Another year has gone by, and there are still many people who were unable to buy a house. So this housing crisis still continues. Now, there was hope earlier this year with the Fed potentially cutting the federal interest rate, the election being over. There was hope that things would start to change and maybe there'd be more homes and maybe homes would be a little bit more affordable. Well, we haven't seen that yet. So let's dive into a couple of articles that I found during my research on what's going to happen for this housing market in 25. It's going to be more of the same, but I'm going to dive into these articles right now and, of course, share my opinion. I'm also going to share with you what I think is going to happen come next year once the new Trump administration takes office in January. Please, no political comments. I'm going to mention a couple of his housing policies and touch on that and what I think is actually going to happen with the housing market and those policies. So let's get into it. So let's see what our friends at Zillow has to say about next year. Zillow projects that U.S. home prices will rise 2.9% by October 2025. They also have an interactive map that shows what markets are going to see the largest price increases. So right out the bat, price increase to 2.9%. I welcome that. I welcome that after the pandemic. I really do. This is good. But what about home sales? This week, Zillow economists announced they expect U.S. home prices as measured by the Zillow Home Value Index to rise 2.9% between October of 24 and October of 2025. This is an upward revision to our outlook from last month. Opposing forces are working to keep home values climbing, but only at a modest pace. Inventory remains very low by historical standards, which, paired with expectations for declining mortgage rates and modest improvements in other leading indicators of home sales, is helping to buoy home value appreciation. At the same time, modest increases in new for sale listings and persistently high mortgage rates are combining to limit price growth. While Zillow economists predict a 2.9% increase in national home prices over the next year, they only expect a gradual increase in existing home sales in the coming year, with an estimated 4.3 million sales in 2025, up slightly from the 4.1 million transactions recorded in 2023 and 4 million projected for 2024. I want to share with you here the 10 areas where Zillow thinks home price appreciation is going to increase a lot next year. So those areas are Atlantic City, New Jersey at 6.5%, Kingston, New York at 6.1%, Augusta, Maine, 6.1%, Pottsville, PA, 5.9%, Knoxville, Tennessee at 5.8%, Vinland, New Jersey at 5.7%, Lewiston, Maine, 5.7%, Concord, New Hampshire, 5.6%, Bangor, Maine, 5.3%, and Muncie, Indiana will see an increase of 5.3%. Now, this makes sense. These are areas where home prices are relatively low and still affordable for most people. So that makes sense because everywhere else right now, it's just too darn expensive. These houses are a lot of money. So that's why they're anticipating these are lower price markets and people are going to be flocking there to buy a house. That's why you're going to see home prices increase in those areas. The purpose of my channel is to teach consumers how to navigate buying and selling a home. But there is something else that you need to be aware of after you buy a home. Did you know that your home could be stolen right out from underneath you without you even knowing it? This is where Home Title Lock comes in, and I'd like to thank them for sponsoring this video. Cyber criminals are stealing homes every day. The FBI calls it house stealing, and it's one of the fastest growing crimes in America. These scammers forge your name, transfer your home's deed, and take out loans against it. And by the time you realize it, your equity is gone. Here's how easy it is for them. All they have to do is fill out a quick claim deed that shows that you sold your house to a fake person that doesn't even exist. They'll add your address, name, and even a fake version of your signature. Then they'll stamp the document with a fake notary stamp. This is why I'm using Home Title Lock, the sponsor of this video. Please check out Home Title Lock. The link is down below, or you can use promo code JackieBaker to start your 30-day free trial. Enter your address and you'll receive a complete title scan to see if you're a victim already. Do it today. Protect yourself. Now, Fannie Mae has come out and said They're projecting that 2025 is just going to be a very slow sales recovery for the housing market. So let's dive in to see what they have to say. Existing home sales are expected to remain under pressure as rising mortgage rates and persistent inflation dampen market activity, according to the November commentary from Fannie Mae's Economic and Strategic Research Group. The group now projects existing home sales to grow by only 4% in 2025, a downgrade from its earlier forecast of an 11% increase. The 2024 pace of existing home sales is on track to hit a nearly 30-year low. Although sales rose 2.9% in October compared to the same month in 2023, the first annual increase in over 3 years, the long-term outlook remained cautious. The National Association of Realtors reported that October's seasonally adjusted annual sales pace was 3.96 million, up 3.4% from September, but the ESR group sees ongoing challenges ahead. Long-run interest rates have moved upward over the past couple months following a string of continued strong economic data and disappointing inflation readings. To the extent that the recent run-up in rates has driven by market expectations of stronger economic growth, we think this bodes well for the labor market outlook and home purchase demand. The ESR group had previously forecast mortgage rates dipping below 6% by early 2025. However, the updated outlook now anticipates rates ending 2025 at 6.3% and remaining above 6% through 2026. The elevated rate environment is expected to prolong affordability challenges, which continue to constrain housing activity. However, we expect inventories of homes added to the market and therefore sales of existing homes to remain subdued throughout next year, as the higher mortgage rate environment is likely to strengthen the ongoing lock-in effect. Despite these near-term challenges, the ESR group projects a rebound in 2026, with existing home sales forecast to grow by 17% in 2026. Home builders' willingness to offer buyer incentives was cited as a key factor in supporting new construction activity. These measures aim to offset higher borrowing costs and attract buyers who may otherwise stay sidelined in the current market. Meanwhile, Fannie Mae's 2026 GDP growth outlook is projected to align with the long trend of approximately 2.2%. Core inflation is expected to stay elevated in the short term, but it's forecast to reach Federal Reserve's 2% target by the second quarter of 2026. However, the ESR group anticipates less monetary policy easing in 2025 than previously forecast. Okay, so it's sorry to say it's more of the same of what we've had the past few years. It's going into 26. However, it seems to be calming down. I do like the fact that they're saying their home prices are only going to go up 2.9%. We need that. Okay, we totally need that. These home prices that have, gone up 20%, 30% in some markets, I'm glad that that's finally calming down, but we still have an issue with the mortgage interest rates, right? It's creating this lock-in effect. However, people still need to move. So I'm seeing in my area, and I'm hearing from other agents, that people are kind of fed up waiting and they need to move. They need to sell, and people, I think, are coming to terms that this is the new normal right now, this mortgage rate in the 6% range. There were talks a couple months ago that in 2025 that the interest rates could fall down into the 5 range, into the high 5s by the end of 2025. Now Fannie Mae is saying that's not the case. It's not going to happen, and they're predicting 6% mortgage rates will carry into 2026. That's possible. But here's what I've learned doing these market videos for you guys and being in real estate all these years. Nobody can really predict anything. We have these economists that look at all the different models and they have their forecasts, but they've been known to be wrong. So yeah, it could still stay in the 6% range, but you never know. So we just don't know, okay? And before you throw your stuff at the TV at me, because you're frustrated hearing this stuff, this is the reality, folks, and this is just how it is. So I also want to address another question I've been getting lately, like what's going to happen now? We're going to have a new administration come January. Trump is going to take office on January 20th. How is that going to impact the housing market? Well, I will tell you, personally, some of the policies that he suggests, I think it's well and good. But the problem is we've had this issue with this housing shortage going back to 2008. Yes. So no president, we've had 3, right? We've had 3 different presidents since 2008, never addressed that shortage at all. So I don't know what's going to change now, to be honest with you. I'm not bashing anybody. I don't care who you voted for. The bottom line is the government hasn't done a darn thing to address it since 2008. So there, I said it. And please be nice in the comments. I know some people get a little crazy. Don't be nasty to each other. Let's all be nice. But this is the reality of it, right? Nothing's been done. Now, as far as his policies where he wants to use some federal land to build new homes, that's all well and good, depending on where the land is located. Okay, so there's talk that some of this land, if it's in a remote area and it's far away from a city where, people go to work, that could be a problem. May not be a desirable place to live unless you start building like a new city. You can create a new town, a new city, and bring industry there and create jobs. That could happen. But do I think that's going to solve the housing problem? I don't think so. I do agree that he does need to cut some regulations for the builders to make it easier for them to be able to build homes. There's a lot of red tape that these builders go through, and the cost to get these permits is super expensive. That, I think, could have an impact as well. It'll allow these builders to build more homes. But here's my other piece of advice, and what I would like to see, and many people would like to see, if builders are going to build, you got to build affordable homes. For the last, say, 20 years, maybe even longer than that, we've been seeing a lot of these McMansions built. You know what I'm talking about, these really huge homes. And we've gotten away from building the starter homes. I think there needs to be incentives to builders to build these starter homes for these people who are trying to start out and raise a family. They're first-time home buyers. They should be able to afford a modest home. There should be some type of incentive for these builders to build these starter homes for those first-time buyers, those who are starting out. I think that would have a tremendous impact on the housing market. So let's face it, we could lower the interest rates, right? They could lower the interest rates all they want to make it affordable, but at the end of the day is when you don't have inventory and you have too much demand, the prices will go up. People are hoping for interest rates to come down. I really don't think that's a great idea right now because we still have super low inventory, and that's just going to drive the prices higher and therefore impacting the affordability. People are probably going to come at me and disagree with me, but look, this is what I've seen since 2020. This is what's been going on with those low interest rates. Now, if the rates are low enough to release homeowners from those golden handcuffs, that could work. There have been surveys done where people feel that if the mortgage rates fall into the 5% range, they're okay with that. They're okay with selling their home, giving up their 2.5%, 3% interest rate, and going into another home with a mortgage in the 5% range. So if we get down to that point, I think that might help increase more inventory. But will it be enough? I don't think it will be enough. I like how Fannie Mae's projection for 2026 said the home sales are going to increase by 17% because builders are going to be building again. I really appreciate that, and I do hope that's the case. So as always, my piece of advice, if you're going into 2025, you want to buy a house, just continue doing what I always tell you to do. Save for your down payment and your closing costs, and save for an emergency fund. If you have any debt, you have any bad credit, clean it up. Clean it up now, because the better your credit score, the better your interest rate will be when you apply for that mortgage. So I'm sorry to be the bearer of, well, not so bad news, but it's the same news as the prior years. But one never knows. These are all forecast predictions. Things can change on overnight. You never know. So yes, unfortunately, it sounds like 2025 is going to be more of the same of what we've seen the past couple of years. Maybe things will change. You never know. Look, they've made these predictions and forecasts before, and they've been wrong. So you never know. Things could turn around. Do you want to know what's been going on with the housing market this past year? You can watch this playlist right here. Good stuff. Videos that covered this entire year, all about the housing market. Thank you so much for watching me today to get your dose of real estate reality. My name is Jackie Baker, and I will see you next time.